Okay, so I'm now shifting gear from kind of domestic things, and I'm going to talk a bit about the how Australia interacts with the rest of the world. And I've got a series of charts on that because it leads quite nicely into a discussion about the financial crisis. So let's start with exports and imports as a share of the economy. And what you see here is that the economy has become gradually more open to international trade. So again, if you go back to the late 70s, both exports and import shares were of the order of 15, 16% of the economy, and now they're more like 25. So we export about 25 or so percent of, export about 25 or so percent of what we produce, and imports are roughly the same share of domestic production. So along with a lot of other countries, we're becoming more connected with the global economy. That's a pattern that has to do with declining transport costs, but also to do with policy, to do with a recognition that economies tend to be more efficient if you don't have barriers to trade. And so one of the big stories of the last 20 years has been a reduction in tariffs and quotas to try and stimulate trade, because there's a fair bit of strong evidence that economic performance improves in countries that are better connected with the global economy. The other feature of the Australian economy that I'm sure you're all aware of is the extent to which we're connected to Asia. So if you look at our exports, roughly 60% of our exports go to Asia. So Asia here is defined as the ASEAN region, which is the 10 countries in Southeast Asia, which you would know many of, or you'd know all of, Indonesia, Malaysia, Thailand, etc., etc. And then it adds also China, Japan, Korea, Taiwan and Hong Kong. So, so that's where about between 50 and 60% of our exports go to the region. And the other line, which I wasn't aware of till I kind of got this chart drawn, was that the amount we import from the region has been going up quite sharply over time. So if you go back 20 odd years, something like a third of our imports came from the region. Now it's more like half. So we are increasingly connected to Asia, both on imports and exports. The next slide is of the terms of trade, which is not something that non-economists spend much time on, but economists get excited by. The terms of trade is the ratio of export prices to import prices, and it's very important for an economy like Australia's. When the world decides to pay us more for coal and iron ore and those sort of things, the terms of trade go up, and we get a huge amount of income spilling into the domestic economy. If you'd asked me a few years ago whether the peak in the terms of trade in the Whitlam era, namely the peak in March '74, was a big deal, I would have said it was a big deal. But with comparison with the terms of trade boom we've just seen, it looks much less of a big deal. The small, let's see if I can get this to work, get an arrow. Yeah, I can get an arrow. This here was the decline in the terms of trade that was associated with the Banana Republic statement of Paul Keating's. So at the time, this felt like a big cut in our national income, but as you can see, it pales into insignificance with the size of the terms of trade boom that we've experienced over recent years. And it is on the back of that terms of trade boom that the mining boom was built, and it is on the back of that terms of trade boom that the huge revenue windfall that the government, federal government was party to over the past several years, with huge increases in tax revenue. And now, as you can see, it's come off, but it hasn't gone away completely. Where that line goes next will determine a lot of things about the structure of the Australian economy over the next several years. One other feature of the Australian economy, which many of you would be aware of, is that we run large current account deficits and have done for a very, very long time. In fact, over this history, which goes back 50 years, roughly, There's only 1 year there where we ran a current account surplus. Another way of saying that is that we invest more than we save. So we borrow from the rest of the world in order to increase the amount of investment in the domestic economy. That means we have to keep the confidence of international investors in the Australian economy, and the current account has been a constraint on domestic policy formation, I guess, for a long time, and there's been a lively debate about the current account deficit and the implications of the current account deficit. We may come back to that in question time if people are interested. And now we're getting closer to issues to do with financial markets again. Not only have we increased our share of exports and imports of physical goods to the rest of the world, we've also increased the amount of trade we do in financial assets. So here you can see that the share of the bottom line is the size of our foreign assets, foreign assets, so that's holdings of foreign shares, holdings of foreign companies, and the top line is liabilities. So, but the point is that we have very substantially increased our financial holdings, both foreigners holding Australian assets and Australians holding foreign assets. That's been a very strong trend over the past 20 years or so. And because the top line's above the bottom line, it means that in net terms we owe money to the rest of the world. So we have a share of net foreign liabilities that's now of the order of 60% of GDP, and a share of net foreign debt that's now a bit under that, but close to 60% of GDP. Again, this is a feature of the Australian economy which is unusual, and it's at times in the last 20 years it's been a big topic of conversation, and I'm happy to talk about it more in question time. But as I say, it is relevant to the financial crisis because we need to be able to continue to borrow in international capital markets, and international capital markets have been pretty badly behaved over the last 18 months or so. And this just shows you again that financial things have become a more important part of the economy than they used to be. So these are a series of measures of Australia's assets to income and net wealth to income, and most of this is financial assets. Some of it is obviously housing, but there's a lot of financial assets in here. And the general trend of these things trending up over time is simply another way of saying that the financial side of the economy is becoming an increasingly important part of the economy. The fact that they go down there at the end is what's going on. That's the financial crisis wiping out some of the value of shares, particularly over the past year or so. Okay, now I'm going to change gear and talk in detail about the financial crisis. And I'm now going to switch to actually a bunch of dot points talking about the causes of the financial crisis before I go back to showing you a whole bunch of charts which are kind of ooh, ah, wow kind of charts, as you'll see. It's been a great time to be a macroeconomist, though I must say that it's all been a bit much at times. And it's not over yet.